Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, asset values are under threat as the cost of money rises. All the focus in financial markets is on bond yields. They rose overnight as investors concluded that the world's major central banks would need to keep the interest rates higher for longer to keep inflation in check. The yield on the benchmark US 10-year Treasury note rose to above 4.5%, topping 2007 highs, while Germany's 10-year bond yield surged towards 2.8%, its highest since July 2011. And the ECB warned that it will be holding its policy rates higher for as long as is necessary to keep inflation down. That could be quite a while. And in Washington, Moody's warned that any government shutdown over its inability to pass a funding resolution would be negative for its rating, adding further yield pressure on the benchmark. In China, it is crunch time for a growing number of very large property developers. More are being liquidated, others are stuck in legal limbo and unable to make bond payments, while others are watching their equity value dive as investors flee, trying to limit huge losses. It's a full-on rout. Officials are at a loss as what to do next. And Singapore's CPI inflation rate held at 4% as expected. Their core inflation rate, the one their central bank watches, fell to 3.4% from 3.8% in July. In Australia, the excellent agriculture conditions over the past 2 years has seen their cattle herd and their sheep flock rise sharply. Now, with the prospect of El Nino hot conditions, farmers are flooding meatworks with stock and prices are collapsing. Industry data shows cattle prices broadly down almost 50% on last year and sheep prices down 37% there. The flood of meat on offer will inevitably affect what our farmers can achieve in international markets. The US Treasury 10-year yield starts today up a notable 9 basis points from yesterday at 4.53% and another recent high. And the price of gold will start today at just on $1,916 an ounce. That's down $9 from yesterday. And oil prices are 50 cents softer at just on $89.50 a barrel in the US, while the international Brent price is just under $92 a barrel. And the Kiwi dollar starts today at 59.6 US cents, unchanged from this time yesterday. But against the Aussie, we're up a quarter cent at 92.9 Australian cents. Against the euro, we're 56.3 euro cents and also up a quarter cent. That all means our trade-weighted index starts today at 69.5 and a new 45-day high. Get more news about New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.